Every trade will have his own personal preference for support and resistance tools. Some traders will only use static levels, where other might use a maximum of classics and dynamic support and resistance. Unlike classic support and resistance areas, dynamic levels are air zones that change. Each time the new candles print on the chart, the SR levels is adjusted at the trade. We'll use the new level of their decisions and not the previous one. In today's video we will discuss the most important 10 trading indicators that will offer you dynamic zone of support and resistance. First, moving average. One of the benefits of using moving average for finding dynamic support and resistance is their ability to be handy when the market price is going through a hidden area in our charts away from major levels on the market. And as a forex or stocks traders, you cannot ignore the momentum when the price reaches the area of the moving average. You must understand that something is going to happen when the price reaches a moving average. It will bounce or will break through. The logic behind why moving average as support and resistance work are very similar to why price moves. Let's say that most traders use 20, 50, 100 and 200 period moving average. When more traders expect something to happen around this moving average and they have a common goal, a move will probably happen. For example, you use the H1 chart and the price rise to the 50 EMA. That could be really good dynamic support or resistance levels. You will notice that every time the price touches 200 EMA and tests it, you will see a bounce back down because the price uses this moving average as resistance. Of course, the price will not always perfectly bounce back from the moving average. Sometimes it will go a bit above before it starts going back in trend directions. That's why one of the best way to estimate the ability of moving average is the support or resistance areas is to watch the price actions around them and combine them with classic support and resistance levels, and this is valid for all indicators we will discuss in this video. Second, holy pivot points. Pivot points plot 7 support and resistance levels intended to find intraday turning points in the market. Since many markets participants track these levels, price then to reach to them. Pivot points have advantage of the beginning of the lagging indicator. They can easier act as an entry target themselves by using them as dynamic support resistance or the levels for stop losses or take profit levels. While many traders use the daily or the weekly pivot points, you can also use hourly points to find dynamic areas of support and resistance. The hourly pivot are calculated based on the high, low and the closing price of the previous hour, and they are excellent tools to predict dynamic support and resistance levels in the current or upcoming hour. Hourly pivot points are the great way to identify introductory areas of support and resistance, and they work even better when combined with other keys of technical analysis like price actions or other indication. Third, Bollinger Bands. Graphically, Bollinger Bands are two lines that limit price dynamic from above and below. These lines can act a kind of support and resistance areas which are located in this far from the current price. Most of the time Bollinger Bands are drawn at a distance equal to the central number of standard deviations. Since the magnitude of the standard deviation depends on the volatility, the bands adjust their widths. They increase when the market is volatile and they decrease in more stable periods. Bollinger Bands identified neutral extremes in the emerging trends. A dynamic resistance zone forms below the upper and dynamic support from above. The lower Bollinger Bands, the uniqueness of Bollinger Bands as dynamic support and resistance is that their widths change in their response to changes in the market volatility. The Bollinger Bands are plotted around an average, but the bandwidth is proportional to the standard deviation from the moving average to the analyzed period. When there is a lot of volatility in the market, for example during the news release, the bank widens. When the market is calm, it narrows. Fourth, Keltron channel use the average, the true range to determine the channel's distance. The channel are typically set to average true range values above and below the 20-period exponential moving average. The upper and the lower bands of the Keltron channels can act as dynamic resistance and support areas. In sideways markets, when there isn't a clear trend to the chart, Keltron channels will definitely provide excellent support and resistance during a trending market. The Keltron channels also serve as a reliable support and resistance area. You will often find that the price will retrace to the lower Keltron bands during the strong upward trends and to upper Keltron bands during downtrend. Fifth, VWAP, sometimes finding the average price based on the closing value will not provide an accurate picture of dynamic support and resistance, and this is where the VWAP comes into play. The VWAP identifies the true range price in the stocks by factors the volume of transactions at the specific price point and not based on the closing price. This is where VWAP can add more value on the standard 10, 50 or 200 moving average indicators because VWAP reacts to price movements based on the volume during the give period. Some traders will use VWAP along with the standard deviation bonus similar to the Bollinger Bands might be used. In a neo reference environment, when the price is extended from the fair value, we often see the reversion to the mean. A trader might short rejections at the upper standard deviation bands of the VWAP or go long on bonuses of the lower standard deviation bands. 6. Ishimoki. One of the primary goals of the Ishimoki is to give you an idea where future support and resistance areas will be. To use the dynamic area, you need to look at the conversion line baseline in like a Kumo cloud. In this uptrend, noticed how the conversion line did a good job acting as support on the minor pullbacks. The conversions lines does this well because it means to track the underlying momentum in the price actions. If momentum is weak, you will see that this is the conversation lines with price crossing it more frequently and not respecting it. In this example, you will also notice that baselines, which is supposed to track the underlying trend in the price actions, notice how as price pulls back deeper in the uptrend is stopped at the baseline several times, offering potential traders setups to get in this with trend. Also, the top and the bottom of the Kumo cloud are strong support and resistance levels. If price moves above the Kumo cloud, the top of the cloud acts as the first level of support and the bottom as the second level of support. 7. Alligator won't make the alligator unique in the ability to shift its moving average into the future, which adds another dimension to dynamic support and resistance concept. The components of the indicator are 5-period moving average that is shifted to 3-period moving into the future and the 8-period moving average that is shifted into the future by 5-period, a certain period simple moving average that is shifted into the future by 8-period. The moving average contrary to when the market is enraged on consolidations. As the moving average starts to diverge, a new trend is forming and the lines will become areas of dynamic support and resistance. When trend is fully developed, the lines of the alligator are separated from each other and moving in the directions of the trend. The bigger the distance between the lines, the stronger the support and resistance area. The bigger the time frame, the more difficult for the price to break through. 8. Heikki Smooth. Smooth Heikki is the modified version of the regular Heikki candles chart. Prices is in the uptrend when the smooth Heikki indicator is bullish or green, and in the downtrend when the smooth Heikki indicator is bearish or red. When price is trending higher, the smooth Heikki will adjust itself by also moving higher to reject increasing prices. This could be explained as the bullish signals. When you see smooth Heikki trending higher, you could enter the market on the rest of the smooth Heikki. Acting here as dynamic support to the upside is true if the price is trading below the smooth Heikki, where you would then search for the selling opportunities as the market is signaling a downward trend. When price is below the Heikki lines, it acts as dynamic resistance lines. Chandlerling exit and the Chandler exit will be above price during downtrend and below price during upward, which makes a good candidate to offer dynamic support and resistance. The Chandler exit sets a trading stop loss based on the average true range ATR, representing a volatility-based systems. By setting the Chandler's exit their ATR values below the period high, the indicator provides the buffer that is 3 times the volatility. Declined strong enough to this level after the opportunity of long positions. So even though it is most used for stop losses, the Chandler line exit can also be used as the trend tool, highlighting areas of dynamic and support and resistance. Downwards pullbacks to the Chandler line exit signals a potential long entry if the aligns with classic support and resistance values, while the upward pullbacks to Chandler line exit signals a potential support short position stance. Envelopes. Envelopes indicates another tool that draws the dynamic price channels on the chart, helping to find trade signals. It consists of the 2 lines, which are deviations up in the down from a normal moving average take as the basis. In the deviation size is chosen while the price chart remains in these dynamic price channels. Most of the time, turning envelope bonuses is performed when there are no clear trend on the chart and the price is moving slowly. In this case, you may trade bonuses of both borders to envelopes indicator. In 3 is evidence that a trend is beginning. It would be wiser to use only the trade is in the direction of the trend bonuses of the lower envelope in the case of the uptrend, bonuses of the upper envelope in the case of downtrend. If you want something new and fun value, we will select choose, support, subscribe to our channel and hit the bell icon to stay in touch when we upload new video. Until next time.